Hey, it's Mark Alexander with Benchmark Mortgage. Just wanted to recap the month we just came out of, which was October 2024, a very volatile market for the stock market, real estate market, mortgage market. And I really wanted to unpack and kind of title this What the Fed. And what I mean by that is a lot of clients, a lot of partners are talking to me about the Fed, about the election. The election's coming tomorrow as I record this. And I wanted to share some real data, share what just happened last 30 days and where the US housing market is heading, just so we can all feel a little bit more confident. Because if we really look at it right now, a lot of clients that I'm talking to, and just a lot of people I'm talking to in general, are feeling like this, right? Chicken Little, the sky's falling, waiting on the sidelines. Who's going to win the election? How's that going to impact the market? A lot of uncertainty. And so, jokingly, I kind of put this slide here, but it's the truth. This is what a lot of people are saying, or maybe they're not saying it, but they're thinking it, right? And I think when there's uncertainty, there's actually a lot of opportunity. When times of uncertainty come, opportunity strikes for those who are prepared and ready from a data perspective, from a knowledge perspective, and a planning perspective. So, if we really go into the first topic I wanted to speak on, which was how is the election going to impact the housing market, right? And so I shared some of these a few months ago, but I wanted to reiterate these because I think they're super important slides, right? Because when we look at the election, the last 11 presidential elections, the year after, we've seen 9 of the last 11 elections, the year after have more home sales in the United States than the year of the election. So what this is saying is that statistically speaking, the year after the election is a busier housing market. A lot of it's because of uncertainty, right? If you look at home prices, 7 out of 8 of the last presidential elections have led to higher home prices. And that's the year after the election. And so if you look at that to say that there are statistically a lot of people that kind of hold off, and that causes prices and home sale numbers to be lower statistically during election years. So, well, when's the best time to buy? If you're ready, it would really be this year, not next year, when you're looking at the stats. And if you want to kind of get into conspiracy theories, right, let's look at mortgage rates, right? If you look at 8 out of the last presidential elections, going back to 1980, from July 1st of the election year, right? So we're at right now, checking my phone, November 4th, right? July 1st to November during recent election years, mortgage rates have actually fallen from July 1st of the election year to November, which is election day, right? And if you look here, 8 out of the last of the times they've fallen. Now, if we go to this year, right? Well, so now the data's in, right? The numbers are out. I remember I spoke on this in July, and it was a lot of going back and looking at it. But now we have real data, live time right now. Here's a chart of mortgage rates, and I pulled this last Friday. You know, if you look at October last year, we were almost at an 8% 30-year fixed rate mortgage. If we go to July, though, July we were at in the around 7.2, 7.3 for mortgage rates. We fell all the way down to 6.1%. We've been trending back up right around 7. And so if you look here, we're still lower technically from a mortgage rate perspective from July to November. Now, you might be wondering, well, what is the arrow, right? And so I would ask you, but I can't do that on a video. So what I'll say here is the arrow is the day that the Fed cut rates 50 basis points. So if you think about that, mortgage rates, the day the Fed cut rates actually started climbing almost an entire percent in the last really 4 to 5 weeks. And so the reason that happens, there's a lot of strong economic data leading up to the election, right? There's a lot of uncertainty with the election coming up. And so we've seen a climb in mortgage rates. Now, as I speak today, rates are down, but they trade every day. And so what I'm showing you here is that there's been a lot of volatility, and we got to keep our eyes on this as we head into next year. But the higher rates go, the better opportunities are for buyers from a negotiation perspective. The lower rates go, the less negotiation room. And so getting a plan in place is really important because you don't have to hold the mortgage for 30 years. And so when we go into the Fed, right, so the Fed cut rates 50 basis points, let's look at odds of future Fed rate cuts in the United States right now. And so the Fed meeting is this Thursday. So as I record this on the 4th, we're 3 days away from that. Right now, there's a 94.5% chance that the Fed is going to cut rates 0.25% in the Fed funds rate, right? Again, it doesn't matter. It's not directly correlated to mortgage rates, but the Fed is expected to cut rates by a decent chance. But I think the bigger thing that I want you to focus on here is let's look out a year, right? Let's look out to October 29th, 2025. And if you take in these 3 data points that I put in here in the rectangle, there is a 73.2% chance that the Fed is going to cut rates anywhere from 1% to 1.5% by October 2025. So what does that mean for next year? More certainty, lower rates, which ultimately increases demand, right? And if you go into the predictions of mortgage rates, be quick with this, right? But you take Fannie Mae, Mortgage Bankers Association, and Wells Fargo, the average of all three is that mortgage rates are going to start trending lower and into the fives. And so that is where we're heading next year. And if you look at that in a graph perspective, this was the pandemic years with record low interest rates. And then we see this fast interest rate increase in the US. And then now we're trending back down. And so again, it's just one of those things that you got to see what happens and get the plan together so you can buy when it's good for you. This is an important stat that I saw from Black Knight. So 5 million renters qualify for home ownership for every 1% mortgage rate reduction. That's a big stat, right? Because if we see rates come down, then that means millions and millions of renters now can qualify, right? I'm not saying that homes aren't unaffordable right now. It's definitely an unaffordable housing market, but it doesn't mean it's a bad housing market. It just means you need strategy and you need a team behind you. But when rates come down, here's the questions, right? When rates come down, will there be more buyers entering the market? I mean, I'd say yes. When there are more buyers, does this increase demand? It's another kind of like, okay, Mark, yeah, of course, like that's just common sense. And then with more demand and competition, will this increase home prices? Again, the answer is yes when you're looking at the fact that we have a limited amount of supply of homes. Basic economics, more demand than supply, increase of prices, right? And so I know this slide looks like common sense, but really think through that. Really think through what does 2025 look? And so feel free to email me, text me any questions you have. You can scan this code if you want the slides. I'll put it as well in the value bomb. And then also just if you want to share this with anybody, I send out reports like this at least once per month with market reports and weekly content to help you stay ahead of this housing market and really be a subject matter expert as you're navigating the U.S. housing and real estate market. So hope you have a great rest of your week and look forward to chatting soon.